Well, should we get going? You want to get going? If you become
Yeah,
a problem, if you
people
become a
can send in
problem,
questions on the chat,
it's my
right?
first time, so I'm gonna do it up. And we got extra cameras in here. Okay.
All
All right.
right.
Here we go, party people. First of all, this is my man Chad Harris, and I'm Steve VanCauwenburgh.
Hello.
I'm in Oklahoma City. I've been doing real estate since 1999, so almost how many years is that? 21 year, almost 21. It'll be 21 years in September. And Private Money is relatively new to me, and it's I put Chad's name on top because he's been doing Private Money a lot longer than I have, and he's done over 50 something transactions. If you don't know me, who I am, I'm an investor myself. I buy houses. I was working on a property today, not physically, but a commercial property. So I'm constantly buying property. I'm an educator. I've written several books. I am a coach. All right. So that's me. I'm Steven. That's my wife. That's Kennedy. That's Katie. And that's Maxwell. So I don't know if you knew my story before, but I was born in Dover, New Jersey. I lived in an apartment majority of my life. My dad left when I was about 2 years old, and it was a very frustrating time of my life because I didn't understand why. My brother thought it was my fault that my dad left because all the attention was turned to me. And then my brother basically was abusive to me, and my mom could not handle my brother, and so he went to a foster home. So that was kind of the first thing. You can kind of get a picture for yourself that it was a rough upbringing. I didn't have a father figure in my life. We moved all the time, and my mom, who is an amazing individual, worked 3 jobs to support myself and my brother for a little while. He went on to a foster home about he's 6 years older than me, around 8 or 9 years old. All that I remember growing up was we're living in a 1-bedroom apartment. My mom lived in the living room and I lived in the bedroom. And I was just, I hated that situation. One reason is because I could not invite friends over. My mom was very insecure about our living conditions and that our lack of money. And, you know, I could never have friends over. So I was basically grown up as an introverted individual. Through that process of just always being alone, I would lash out and have problems at school, and it just continued to snowball. And I actually, over time, had a learning disability of being behind 6 years in reading, and we can get into that later. But my main goal growing up was, as I was tired of living in an apartment, and I wanted to live in a house, not own a home, but live in a home. And so that was my first dream. My second dream was to own a business. And so my mom and we eventually left New Jersey and moved to California. Why California? I don't know. Better opportunities. New Jersey wasn't a good place because they have a law there. You have to go to school. And I went to a special school because I was behind. And what happened there was my mom figured if we moved completely out of the state, it would give me another opportunity to pursue school, and it actually did. And I got my grades up and actually overcame my learning deficiency. Now, in 1992, I was playing in basketball. Well, actually, my sophomore, junior year, I was playing basketball, and this dude invited me to go to church. And I was like, why church? Church is whack. I got kicked out of church when I was a kid. And he's like, you should go to church. And I was like, no way. And he invited me to church, and he's like, there's girls there. And on July 29th, 91, I accepted Jesus as my savior. And the point of all of that little story is how I got to Oklahoma. A lot of people are like, you were born in Dover, New Jersey. You lived in California, you went to high school. Why in the world would you ever go to Oklahoma? Well, I went to Oklahoma because my youth minister that mentored me in California went to OBU, which is Oklahoma Baptist University. And that's how I got to Oklahoma. And so that translated into my second dream of owning a business. And that business became a mobile DJ. Wow. I know that's a very bizarre story, but that's my story. I'm sticking to it. So as I went to college, and obviously college was not for me because I dropped out. And you may have gone to college and it may have worked for you, but it's not exactly what I've thought school was be. After I figured out that you memorize and show up, it's pretty simple. And of course, there's more to college than that. But I was in college kind of searching, and I dropped out, and I was living in an apartment, not apartment, in a house for the first time. And this is a couple of years later, and someone handed me the copy of Rich Dad Poor Dad. And I got this copy, and it said in this book, and hopefully you've read it, it said, "You can be rich." And I was like, for real? And I read it, and I was like, is it possible? And yes. And so I was in the music business at this time, and I was I was managing, not coaching, a band in Tulsa, Oklahoma. And one day I went to their house, and they lived in a duplex. And I was like, what is a duplex? And a duplex is two families living in one property. And I didn't even know what a duplex. I knew what an apartment was. I didn't know what a duplex was. And so so let me get this straight. These young men that I was managing, their merchandising and booking this band, were able to travel the country and not worry about money. And that was the first time in my life that I understood through Rich Dad Poor Dad and this duplex that you can own a duplex, and it can bring you can be free financially. So hold on, one quick thing, folks. I think some people are trying to get on. So hold on. Let me just see. Can everybody see everybody that's on there? I don't know. Okay, there's somebody. Sorry, someone popped up. Okay. Sorry, man. So anyway, so that was my first time that I got to understand that the power of owning something, renting it out, living for free. That was my first like attraction to real estate, was that you could live for free. So then I was cutting the grass one day at my house that I was renting, and I saw this sign next door, and it was an auction sign, and it was Dakil Auction. You can look it up here in Oklahoma City. It's still rolling. It's DAKIL auction.com. I looked up the website. I went to, and I still buy houses there today. I gave an address, and it was not that far from my house. I drove over to the property and walked around the property. And then the auction was actually happening that day that I saw the sign, which is bizarre. This house has been next to me. So I went to the auction, and people were buying houses, and there was like 20 something houses, maybe more. I can't remember. And people were buying them for 14,000, 12,000, 11,000. And at that time, my mind was like, how is that even possible? Now, this is 1999. And I was like, even a car was more than 13, 15,000. So I roughly around the fifth house, I was like, I raised my hand. Now, here's the thinking. If I can get a car loan for $15,000, and that was a top of the line car, I'm assuming back then, I can easily get a loan for a house. That's what I thought. And so I raised my hand, and at that time, what you had to pay, the buyer's premium was 5%, and you have to write a 5% check for that property. So I won the auction for $14,500. So my check that I had to write, and back then, 1999, you could write a hot check and it wouldn't clear instantaneously. You could write a check, and I bought the house on Thursday. I knew I had Monday it would clear. And then on the next day, on Friday, I pawned everything I owned, from my microwave to anything I can find. My gold chain that I got in the 80s with an eagle on it. On my first job, when I worked at McDonald's, I pawned that chain to put the 5% down. So I was like, okay, I got that done. $750. That was my only money. And then I tried to go get a bank loan, and they denied me. Everywhere I turned, they were like, no, what's a DJ? You don't have a job. You haven't done your taxes. And honestly, I haven't. And I didn't know. So I did the first thing ever, got my first private loan. I didn't even realize this until just recently, someone brought this to my attention. They're like, that's private money. I called my mom. My mom at that time lived in Walnut Creek, California, in a trailer park that she bought for $16,000, a trailer home. And she called Bank of America, and they're like, "You want to borrow $14,000 in Oklahoma?" They said yes, and that's basically how I got my first property. So pretty cool. In 2012, I sold a business that I owned, OK Bride, and I invested in myself and hired a book writer, and I wrote the book, The Savvy Landlord. You can get it on Amazon, or I can ship it to you. And that's when we started this brand called Savvy Investors back in 2011, 2012. And 8 years later, this is my first webinar with my great friend, Chad Harris. So let me walk you through. This is my story in one slide. And so let me show you how I did it. And I hopefully that you can be inspired today. That is my goal. My goal for the end of this webinar is for you to get all your questions answered as fast as possible, to learn as much as possible, but ultimately that you can do this after this. Like there's no reservations that you can do it. And I've done it backwards, and I'm going to go into how I done it backwards. But at this point in time, at this juncture, to my name, I own 280 units. I own 140 units here in Oklahoma City, single family and commercial, and some duplexes and so on and so forth. And I have an apartment building. I have interests that I am a part owner in Orange, Texas, which is 140 units. So, and I'm always buying and selling. So that's where I'm at today. So you saw from from birth, single family, mom lived in a trailer park, no money. And I don't even get into my real detailed story where I was homeless at one time, but that's on another episode, I guess, or whatever this thing is, webinar. So just like you, where you're started in 1990, 2005, I did owner financed. I was so desperate. I just started offering people $2,000 down, and I just did as many offers as I possibly could. And that's how I got to the first 9 deals. Then in 2006, I got my first loan besides my mom. And then as a real estate investor, then I started rolling in 2007, 2010, commercial building. Then my life changed in 2011. So 2012. So it's not that long ago, only about 8 years ago when the ball started really manifesting for me. And so when you get started in this game, and with private money, it's going to accelerate much faster. See, from 1999 to 2005, I had this stupid mindset that no bank would loan me money. And so I kind of did it the hard way. Now, where I'm at, man, I only use private money now. And I'll get into that here in a minute. But you can accelerate it. When you think of private money, that's someone else loaning you money. It is infinite. You can borrow is unlimited money. There's no level, no limit to what you can do. And see, back then, I could have been bigger, especially during that season, 1999, 2005, but I had this wrong mindset. So then I finally got a real mindset in 2006, and it's another story. I don't want to get all, we can cover this stuff. If there's any questions that you want to know about where these transitions are or why this happened, but this is just kind of give you a scope of my life, how I got to where I'm at. So 2011, I bought an apartment building. My life started changing, started really mastering banks, 2013, 14, and 15. And then 2016, I bought 35 units or houses in 2016, started wholesaling for the first time. And then what else? And then in 2007, started focusing on family. I was really overweight. I really wanted to focus on my health. And then I started the radio show, 2018. I don't know if you listened to that. And then in 2019, I went all in on private money. And now I'm focusing on relationships and doing deals. So here's the thing. Look at Chad's face on there. See, here's the thing. I wish this MBA means never bank again. I started out wrong. I started out creative financing, then I went into banking, and then I went into private money. If you saw in 1999, I had a self-esteem issue. I thought I could only buy houses because I had no job. I can only do creative financing. Now, 20 years later, I want to be Chad. This is why I like this guy. He has done over 50 transactions, has not used one bank to fund his deals. So if I would rewind back, I would be the NBA. Never bank again. I would do it differently, and this is how I do it today. One, I use private money to do acquisitions, and then I do creative financing first. And then worst case scenario, I would use a bank. And so when we get started in this situation here in this class, that was my story, and now we're going to get on with it. But the one thing I think that we need to get, over the hump is that you got to have a vision. The people that you're borrowing money from or doing creative finance, they've never thought of these principles or concepts or techniques before. Or a lot of young people that I try to help or coach, they think that they can't do it or there's not enough money. There's more than enough capital. It's your vision and how to do it. Obviously, Sam Walton said that. So, before we get going, hey, I'm just an average person, Chad and I, whatever, this is just our own interpretation of what we're talking about today. There's no guarantees. Everyone's individual on how they do it. I'm not a professional. I'm not an accountant. I'm not an attorney. This is just my experience, and I just wanted to let you know. So if you really want to do private money, you got to open your mind. You got to have a bigger vision, and ultimately, you got to leave your comfort zone. So what is private money? Okay, so I look at it as it's a personal loan from somebody else. It's someone else that has a lot of money. It could be a friend, a associate, it could be anyone. And we'll get into the people that have loaned me money, why they loan me money, how they loan me money, how I raise money. We're going to get into all of that stuff. But you got to look at what is private money. And the cool thing about private money, there's no regulation. So like with a bank, you can't, at a commercial money bank, you have to basically, they usually have to loan you into your LLC. Like you can get a Fannie Mac loan or an FHA loan or a conventional loan. Usually they want you to put it in your name, for liability purposes and for default purposes. Now, when you borrow money from a commercial bank, when you're a seasoned real estate investor, where I borrow some of my money back in the day, they only loan with the Dodd-Frank, they only can loan to your LLC. And those are all regulated by the government. With private money, it's not really regulated. You create your terms. And it's backed maybe by you personally, or it's backed, most of the times when I ask for private money, it's backed by the asset itself. So that's what private money is. It's just a private loan from one person to another person. The reason why I love private money, it's unlimited. I said that earlier. Unlimited funding equals unlimited deals. And so you've got to really think about that, what type of lifestyle that you could live, or what type of houses you can buy, or commercial properties. You can even pool money together privately to get the deals that you may not qualify before. Also with private money, you really don't have to give them your social security number. To this date, of the hundreds of thousands of dollars that I've raised, I've never given my social security number to a private lender. I don't know if anyone has done that. I don't even, when I loan money out myself, and you'll learn that real quick. We're going to teach that near the end of the class, what's action steps that you could take. The first thing that you can take is make a list of people that are potential lenders, prospects that you could loan money to. And so put my name on there, Steve VanCauwenburgh. Here's my phone number. Well, chat me my phone number. We can put it out there. 405-371-2299. Put my number on there, and I loan up to about $100,000 to $200,000. So there's your first prospect for private money. I loan private money right now. I have about 3 to 5 loans out right now. One's paying me back. And so right now I have money to loan up to $100,000 on a deal. So your first complaint in your mind as a real estate investor, I can't do this, I have no money. I hear this all the time. Well, the number one goal as a real estate investor is what you should be focusing on is finding a deal. Money is always there. And with the tips and tricks that we're going to tell you today about private money. Another wonderful thing about private money that I love, of course, is that you can do 100% financing plus. You can do an acquisition on the deal and get cash at closing. And so don't be confused between private money and hard money. That's one scenario. A lot of people get confused about private money. Remember, private money is on your terms. Hard money is on someone else's terms. Private money is an individual or maybe another real estate investor. Hard money is someone that owns a kind of like a money institution or someone it's a business. Private money, to loan out money for someone else, is a casual endeavor. Now, it's not casual for me. It's casual how I loan people money. I mean, I'm not making enough money as an entity to be loaning and borrowing money. I mean, loaning money and recycling money. That's a business. That's what hard money does. I loan private money out of my IRA, and I have a slush fund that I loan to investors back and forth, and I keep my money moving. It's a private money. It's not a source of income for me. It's extra money for me. It's an investment for me. I'm a private lender. A hard money, it's a business. There's paperwork. They charge you fees. They have a whole bunch of parameters. And so you can see on the screen, that's the difference between the two. You know, hard money, they never usually give you 100% funding, depending on, you know, the equity. They usually charge you fees. There's a process, an application process, and I've seen hard money people charge an application fee, a processing fee, so on and so forth. And maybe later we can go into detail, a little bit different scenario on that. So we're moving right along.
Real quick, Steven,
Yeah.
Aisha asked if you could repeat your number. She didn't get it.
Oh, 405-371-2299. Hey, I'm glad that you guys can see that, because I can't, I only thing I can see on my screen is, oh, you did. Sorry, I can see the chat. Hey man, y'all gonna be working with me out here.
We got it covered. No worries.
Okay. So let me give you, I got two examples and then I'm gonna shut down. I got about 5 or 10 more minutes here, and then Chad's gonna do his story, and we're gonna be sensitive to your time. My goal is for about 30 minutes. Chad's goal is about 30 minutes, and then we're gonna kind of wrap up with some actionable steps. Should take about 15 minutes, and then we're going to do some question and answer. And then, you know, our goal is to be done probably around 8:30, 9 o'clock, just so you know. Okay. And I'm talking fast because we start a little bit late, and I want to give you as much information as possible. You can look this address up in Oklahoma City. This is actually right around my building. This is 19 Northeast 65th. A realtor called me on the property, and I think he tried to sell this property to me about $85,000. And I was like, no way. It needed a bunch of work, about 10 or 15,000. After some negotiations, the individual inherited this house. I got the price under contract for $69,000. That's how I got this property under contract. Now, the first thing that I always do when I get a house under contract. Okay, good. Let's just go back for a second. Okay. Before we get into some more to the private money side, this is how I do it today on private money. I get a house under contract and I order an appraisal, usually through the bank. Basically, I fill out a loan application on this exact transaction. This is how I did it. I got the house under contract for 69. I thought it was worth about 90. And I called the bank, filled out an application, and ordered an appraisal. You can order the appraisal on your own. And there's a reason why I do that. I ordered the appraisal. The appraisal came back at 125. Okay. So that bank right there was willing to loan me the money. So I met this individual, Andy. He's a private lender here in Oklahoma City. He's still loaning money. So if you have your document opened up and you make a list, number 2 on your list is Andy Gribb, Oklahoma City. And if you want that number, obviously you do. We'll send that out to you here in a minute. But Andy is a private lender. I met him at a real estate club meeting, also known as a RIA. Oh, someone's trying to. Sorry, guys. I don't mean to stop there. So I met Andy at the local real estate club meeting here in Oklahoma City called MP, Millionaire Possibilities. And so make sure we mute everybody. Okay. All right. Sorry, guys. So I met him there. I knew he was a private lender. I knew a couple of the private lenders, and his wife is a realtor. And so when I get a house under contract, I'm constantly prospecting for private money all the time, everywhere, as much as I can. That's on my tongue all the time. This guy, wife is a realtor. So I texted him. I said, hey, are you loaning any money right now? That's the first way I do it. Hey, are you loaning any money right now? And I already knew that he was a private lender. I didn't have to qualify him. I didn't have to train him to loan me money. And that's on another scenario. He said, yes. I sent him, hey, I got this house. And I texted them the address, and they said, hey, the ARV is 85. And so it slapped me in the face. I said, snap, I want to do this on a no money down deal. My objective is to close the property at 69,000 and put 10,000 in it. I asked him if I could borrow 80. He replied back with his wife as a realtor, and they pulled comps, and they came back with 85,000. So a normal quick, 80% of 70% of 85,000 is not, it's way less than 69,000. So what I did was I got the application already, and I got the appraisal. Already with the bank, number 3B there, the bank was willing to loan me $93,000 right out the gate with the appraisal that I have in my hand. But I wanted to do this fast as possible. I didn't want to use any of my money, and I didn't want to tie up any of my bank funding. So I sent him the appraisal. And what I do here is I got options. And so to be a super successful real estate investor as fast as possible, you want to have as many options as possible. You want to have as many private lenders that you know. You want to get involved with many banks as you can. Now, of course, I would go with creative financing and private money first on an acquisition, but I would, have backup bank funding because I don't want to lose this deal. It could praise at 125. So I already had a bank committed at 93,000. So I was already going to be willing to walk away with almost $20,000 in cash after closing, but I wanted to push myself and to use private lending. And so they said no to me. I asked them for $80,000 cash. The guy replied back, no. Then I emailed them the appraisal. They said yes. And the interesting thing about this couple, they both have two separate IRAs. They both loaned me $40,000 out of their IRA, one from the wife, one from the husband. And all this is complicated stuff, but we'll get into that later. So I remember years ago, banks will make you lazy, but you can do a lot more with private money. So what I did was I just took action. And so here's another deal. This is another property in Oklahoma City. This is a commercial property. It was listed for $525. I made an offer for $475, and the lady took it, and it kind of scared me. And I was like, whoa, so fast. Like, hey. And this bank I was working with, I working with a realtor that I was not a super fan of, and he's recommended this one bank to me. He's like, well, I don't trust anyone. So I called my bank that I deal with all the time. And I always, when I get a house under contract or where I'm about to get the contract, I constantly prospect for private money, and I constantly prospect for banks. I have at least 3 to 5 banks that I'm in constant contact with at least every 6 weeks that I touch in some form or fashion, either with lunch, with an email, or with a call. But I'm constantly gathering money to do acquisitions, especially when a smoking deal like this comes my way. So this guy was like, my realtor at the time was like, you got to call this bank. They're an Indian bank. They loan. They're very loose with their money. I was like, man, I already got the money lined up with someone else with another bank that I do a lot of work with, and they gave me a soft yes. I can close this thing. And I had some pressure on this deal because I had to close it within 30 days because I already pre-leased this building. This is 8,000 square foot that a retail store was going to go in there. And so I was like, hey, man, I can't be fooling around with this bank. And so anyway, I sent my financials. The guy calls me back. Hey, you're approved. We're going to write it. The guy goes on vacation. I don't know if you know this, if you're a real estate investor. But when a banker goes on vacation in the middle of an acquisition, you should be a little worried because things fall apart when that happens. Chad doesn't even know this stuff because he hasn't even borrowed any bank funding. So your water starts getting a little boiled here when you're about to close and you said all this stuff and it should be closing. And so this bank actually dragged their feet and screwed me around. So I didn't have any paperwork with my soft bank that gave me a soft yes. I put all my eggs in one basket with this bank because it was an Indian bank, Indian tribe bank, and they need to loan money and they have unlimited money. And he told me, my realtor, that they will write me the loan without the appraisal. Well, what happened was the banker went on vacation and never ordered an appraisal. And if you're ordering an appraisal on an asset like this, it takes more than a few days. It takes weeks. And so now we're getting to the end of September and I'm up in arms and I got to close this thing. And so this is what's exactly going to happen to you. And this is exactly what happened to me on my very first private lender that loaned me money. I was desperate. My very first, not this deal, but one of my very first deal, I got a house and I needed the money and I just asked someone else and they said, yes. And this is him. This guy out of Houston, Texas, his name's Greg Meach. He is a private lender as well now. I don't think he loans as much anymore. But I met this guy, and this is how you're going to meet people. These are easy transactions. And I can go into other ways to raise private money with people that have never loaned money before. A gal that I knew 5 years ago, an older person, she's about 50-something years old. She just loaned me $60,000 and she knew me 5 years ago. And it took her 5 years for her to loan me $60,000. So there's extremes. There's quick guys that are real estate investors like me that know the game and are willing to loan. And then there's people that might take 6 months, 6 years, or a couple of months or a couple of conversations to help to basically convert them to be private lenders. Well, I met this guy several years ago at a real estate convention, which we have one of those coming up. It's called Investor Weekend, and go to investorweekend.com. But this is where you meet these people. I met Greg in Nashville at the Mr. Landlord Conference, and you need to go to that. Go to mrlandlord.com. It is the best landlord convention. It's in May every year over the holiday. It's bomb. I love it. And I met him there in Nashville. They move it around. I think it's St. Louis this year. I'm not really sure. But I met him in line while checking in my hotel. And we turned around and I was like, hey, I didn't know anybody in Nashville. This is a long time ago. And I just, hey, let's have lunch. And that's how I met this guy. Well, through those 5 years of knowing him, he was an investor. He had 10 houses back then. I had about 50. And we started just building a relationship. I would help him. He would always challenge me, Steven, I can't get any more money because I'm all tapped out with FHA loans. I'm like, dude, you're not borrowing commercial money. Back and forth. Well, anyway, one day he calls me and he's like, I'm getting out of the single family game and I'm getting into to apartments. And so he sold all of his single families. He only had 10 in Houston, Texas, a little bit more numbers. He walked away with about $1.2 million in cash of selling his houses. Now, granted, I'm giving you the little bit longer story, but he already bought an apartment. He sold those assets after he bought the apartment and he had about $1 million in cash. And so I emailed him on Wednesday. I'm closing on Friday, desperate. And I said, Greg, I sent him the appraisal. Can you loan me $500,000 for 30 days? And he replied back, yes. And by Wednesday, he wired me $500,000. I bought that property with no money down. And he only charged me 1 point, which was $5,000. And then I couldn't refinance it fast enough. It actually took me 60 days. So here's how this transaction went down. He wired me the $500,000. I closed on the property. My tenant moved in. He gave me $5,000 deposit, $5,000 rent. The next month, he gave me another $5,000 rent. How much is that? $15,000 in 2 months that I got into my hands with no money. I gave $5,000 back to Greg for letting me use his money. I wired his money back at closing. I had to refinance with a different, actually, I fired that other bank and I found another bank, a credit union that funded that deal. And that's how I took that property with no money down. Is it possible? Yes. Can you do it? Yes. You can do this. Let me tell you.
All right. Yeah, that's awesome. Great examples,
Okay.
Stephen.
Can you did I make you hold on. Let me make you the guy. Okay. Anyway, that's my story. If you have any questions, I'm going to monitor the chat from here on in. Chad's going to go into his story, how he's done it, and then we will go from there. Where's my little chat button? Okay, your turn, buddy.
So, yeah. Okay. So a little bit about me, how I got into real estate and raising private money. I was a high school English teacher outside Dayton, Ohio, here in Lewisburg, Ohio. And then eventually my family moved to Kenya, and we served as missionaries there. I was still teaching. I was teaching leadership development and vision seminars, and we loved the work. It really fit me. Loved the people we were working with. And one of the key things from that role was I learned how to raise money. So in the beginning, we had to raise all of the money for that work, and which turned out to be a lot of money. And in the beginning, I was not very good at it. So I would continually meet with people in churches, and I would tell them about the needs in Kenya, and then I would ask them to help. And it just kept feeling like I was begging from them, and nobody likes really being begged from, and I wasn't very successful with it. So eventually I had this shift in mindset, and I realized churches and individuals want to be involved in ministry overseas. My job was just to give them that opportunity. So I was presenting them with an opportunity to be involved in ministry overseas, and I was explaining to them the impact they could have by supporting us. And once I made that shift, I raised money very quickly. We ended up raising close to $1 million for that ministry. So we were in Kenya for 4 years, and then we came back to Ohio in 2012 for our furlough. So it's kind of a brief period where we report to everybody who's supporting us. And while we were back in Ohio, our youngest son, Bo, was born. And when he was born, he was diagnosed with Down syndrome and had complications with that. And one of those complications ended up with him having a trach tube, and so he couldn't fly. So at that point, we realized we were going to be staying in Ohio. And I had about 3 months before my job would end, all our income would end. And the house that we were staying in was, offered to us by one of the churches. So we were going to have to move. So when I started my real estate career, it was really out of necessity. I needed to make some money quick. I wanted a house to live in. I wanted my kids to have some food to eat. So kind of the basic needs. But when I started, I really fell into private money because that's what I was used to with ministry. So I was already out talking to people, and they would ask what I was doing, and I was explaining to them what I was going to do in real estate and really what the opportunities were for other people and what I was looking for. And inevitably, I would have people ask, hey, how can I get involved? And so from the very beginning, when my job ended with the ministry, we were able to be full-time buy and hold investors from day one because I was raising private money. So my model that I used in the beginning and still use today is I would buy cheap houses that needed work. Back then when I started in 2012, 2013, it was mainly foreclosures. And I would rehab them. I used to do a lot of the work myself, and then rent the houses out. And after they were rehabbed and rented, the value goes up. And so then I would refinance that out with a private investor. So when I would refinance it out, then the used to go buy another house, and a little bit of that I would take to pay our bills and live off of. So I had a great incentive, and that I had to churn through deals constantly to get that refinance money to make ends meet. And so there were no banks involved. Still to this day, we have over 50 units, still no banks involved. In the early days, I was hands-on, very involved, self-managed. All the tenants had my cell phone number. If you are doing that, there is a better way. Please don't do that. And I learned a lot of those better ways. So now we have built a management system, and the tenants don't have my cell phone number anymore, don't know who I am, and I'm very hands-off. And one of the benefits of that is that I have time to pursue my purpose. So part of my purpose is that I just enjoy teaching and encouraging others. So now I get to teach and encourage others how to invest in real estate, like we're doing here this evening. And another part of my purpose is I get to spend time with my kids. So there's my 4 kiddos. This was taken on our last year. We went to South Africa and Swaziland for a couple of weeks, and we were visiting a ministry that we support, and then just going on safari and seeing the animals. And I love creating shared adventures with them, so creating great memories. You can see my little guy there, Bo. He got his trach out earlier than they expected, and he continually exceeds doctors' expectations. He's a healthy little guy, full of energy, completely stubborn, just like his old man. So that's my family, my story. So what is private money? Steven already explained kind of the nuts and bolts of how you define private money, or what exactly it is. For me specifically, private money was the tool that I was able to use to replace my income and build my portfolio without having any other income, without having a job. So without private money, I wouldn't have been able to build my business the way I did, or as quickly as I did. Some reasons you would want to use private money. We've talked about some, but quick, easier than banks. There's no credit checks. There's no underwriting. It's quicker than banks. So we have, as an example of that, I have a closing on Monday, and I texted an investor earlier this week, said the closing was all set up. We needed $56,000, and he said, okay, I'll have it ready. And that was it. That's how quick it can come together. It can be cheaper than banks. So a lot of times we think of private money as being this higher interest rate. And really, you can get private money for a comparable interest rate to banks, and there aren't any of the fees or points associated with banks and hard money. So there's no limit on the number of loans you can have. And really, the key one for me is there's more flexibility. So you can structure your financing so many different ways with private money. It really allows you to manipulate your business for you. So I'm going to go over some of those ways you can structure it, because there's 3 primary ways, and I use all 3. And so when I get to my example deals, I'll actually show you how I structured those deals using these 3 methods. So kind of the most common is an amortized payment, which everybody's familiar with. Generally, if you get a mortgage on your private residence and it's a 30-year loan, then that principal and interest is paid out over that 30 years. So that's an amortized payment. And you can get those figures for amortization from financial calculators, apps, books, bank websites. They're all over. So an amortized payment works really well if your investor is in retirement or needs cash flow for some reason. So they like that big payment. They know they're going to get it every month. And that works really well in that situation. So another way to structure it is interest-only payments. So you can set it up so that your payment every month on the loan, you only pay the interest. And this option works really well if the investor is using funds from a retirement account, because they don't really want the principal of their loan paid back into their retirement account where it won't get a return. They want to leave that principal sitting in the loan, and they just want the interest to go to their account. So that's a good way to do that. When I first got started, I would structure all of my deals so that I had 1 year interest only, and then it would switch to an amortized payment. So that gave me 1 year where I had a small payment and my cash flow was a little better, and I could try to build and add a few more houses before that payment ticked up with the amortized payment. And the third way, which I really like, is having no payment. So you can structure your deals so there is no payment at all while you have the loan. The interest just accrues, and when you pay back that loan, you pay principal and interest together in one payment. And this works really well if the house needs work. So it's difficult if you're doing a rehab on a house and you have a mortgage payment, but that house isn't paying you any money each month. So it's nice to set those up so that there's no payment while you're doing the rehab. And then if it's a flip, when you sell that house, the proceeds from the sale pay back all the principal and interest. Or if you're doing, the BRRRR technique, when you would refinance, then that refinanced money pays back the principal and interest. So 3 different ways, and you can use the different ones even within one deal. So we'll go over a couple examples, and I'll show you how I've structured them over the years. So this is a house that we bought. It was a foreclosure, and this was when we were doing the BRRRR method. And the basic numbers, I bought the house for $18,000. This is kind of like a bread and butter deal, especially in our first few years. We bought it for $18,000. The rehab was pretty easy. $4,000. We just redid the floors, did some paint. Nothing too involved. So our total investment was $22,000. The ARV, or the value of that house after we did the repairs, was $50,000. So we created $28,000 in equity on that deal. We ended up giving a mortgage to an investor for $35,000 at 8% over 8 years. And that just kind of fit what they were looking for. So you can see the loan that we got, the $35,000, was much more than the $22,000 that we had invested. So we made money on the refinance. The payment was $494. So after taxes and insurance, we made $175 in cash flow. And because it's an 8-year amortization, it'll pay off here in just 3 years or so. So I did a lot of deals like this. Obviously, the equity play is nice. You can't eat equity, but equity really helps you build wealth, and equity is great for leveraging to build your portfolio. In hindsight, if I were redoing this deal today, I would not do the 8 years. The 8-year amortization fit that the investor wanted their money back, but it makes cash flow tight. So if I were redoing this deal today, I would do a 15 or 20-year amortization, make that payment smaller, my cash flow better. But if they wanted that money back in 8, I would just put a balloon in that 8th year and then call them before the balloon and see if they wanted to extend it or if I needed to refinance. So that's the real basic, straightforward BRRRR method with an amortized payment. Another deal we bought about 1.5 years ago. This house was, we got off a postcard and it had been inherited by the seller. The purchase was $25,600, and it needed a little more work. It wasn't a difficult rehab. It was about $9,000. So our total investment was $35,000. And after the repairs were made and it was rented, it was worth $85,000. So in that deal, we created $50,000 in equity. And the way we structured this one was I gave a mortgage for $40,000 at 6% for 2 years, 0 payments. So yeah, no payments. That's nice, huh?
At 6%.
So
Okay, so what'd you do after 2
6%.
years?
What's that?
What'd you do after the 2 years?
Well, I got about 6 months left on it. We'll refinance it with
Okay.
another investor.
Another private event lender?
Yeah. So you can see on the mortgage, we received $40,000. For the investment, we only had to spend $35,000. So I put $5,000 in my pocket when we bought the house. And because we don't have a payment on that mortgage, the cash flow is great. So $725 a month in cash flow.
So let's figure this out. So you got cash at closing, right?
Yep.
And then now you just made a free, basically $15,000 in cash over 2 years. I mean, of course you have taxes and insurance. So that's like crazy. And then the equity has gone up because your market's getting hot up there. So is the value of the house 85,000 today, or is it 100?
It's probably 85, 90.
Okay. So you still owe 40 for that. You still owe $40,000 on the property, which is 50% ARV roughly.
Right.
So you can go to any bank or any investor. I would loan you that 40,000 tomorrow if you would like. We could do this deal if you'd like.
All right, in a couple months I may call you up.
All right.
So yeah. But
awesome.
for me it was great because I get so much cash flow from it. And in that 18
you own
months,
you own the asset. Dude,
yeah.
you own the asset. You have no money in the deal. It's been paying you $600 something a month. I mean, you could live a great life. I mean, I don't know. I don't even do it this way. Like, I think a lot of people get nervous that they don't make a payment. How'd you convince your private lender that you're not going to make a payment for 2 years? Like, what were they thinking?
So with my private lenders in the early years, I had to pitch to a bunch of people, right? So I was telling everybody I was going out finding new investors. But really at this stage, I have probably 10 investors, but 4 or 5 are just ready to keep investing.
Yeah.
And some of them are in stages in life where they like cash flow and they want the amortized payment. Some of them in their stage in life, they don't need the payment. It's just an investment. So it doesn't matter to them whether I pay them or not. They just want the return.
So they just want 6% of their money. They can wait 2 years. I have another friend that does it this way. So you're going to pay them back how much and sometime in 2020? How much what's your payoff? Do you know what that amount is?
We can figure it out here.
So 6% is
2,400.
Yeah, it's like little money.
That would be 44,800, about $45,000.
So $5,000 for 2 years to park their money is ridiculous as an investor. And you made $15,000 total in cash flow on the property, plus the $5,000 that you got at cash at closing. So let's just get this straight, ladies and gentlemen, boys and girls around the freaking world. I need to put you back on a podcast. So you got $5,000 up front on top of the rehab of pocket money. And then you pocketed $15,000 in 2 years. So you've made $20,000 and you just paid them back their $40,000 and their $5,000 measly amount of money to let you use it. This is insane. So you made $15,000 of liquid cash, probably depreciation if you have a good accountant. And then you still own the asset, because I'm going to loan you $40,000 in 3 months at interest only. You're going to pay me $500 a month, and you've never. I mean, this is like they need to put me on an infomercial. This is I'd never even seen this deal. Like, dude, I'm giddy over here. Nobody else muted. They don't know.
You can do a lot of deals if every deal you do, you get
Okay,
shit.
I'm so excited. I want to know, did you present
That's
this?
scalable.
Okay, before we roll on here, I
Yeah.
don't mean to interrupt you because I'm so excited. You know, the one question is, this private lender, did you offer no interest? I mean, no payments, or did they want that? And how did that conversation go down?
I mean, it's simple.
It's simple. Okay. These people that are on here, I don't know if they've borrowed private money. So just assume, Mr.
Okay.
Savvy.
So
Okay.
the private money discussion, in the
No,
early,
with this
with
guy.
this specific
Yeah.
lender,
Yeah.
I said, I have a deal. They had told me they had money to invest.
Okay.
I called them up. It was probably a week later. I said, I have this deal. We can set it up at 6%, no payments for 2 years, and I'll refinance you then, and you'll get your money back. And they said, okay.
Okay.
I mean, it's
So
fine.
how about this? Let me give you some super savvy. So
Yeah,
say this is due June 1st. Are you going to call them up and say, "Hey, now the reason why they probably didn't want a payment because they didn't want to pay tax on it, probably a specific time because it's not they have not received any income." So
right.
if they're an accountant, I see Grace is on here. She's an accountant. What up, girl? But the thing is, I'm assuming they just try to move that tax liability temporarily. But what you can do, and if I was you, I would say, hey, your loan is matured. What would you want me to do with this insurance? I mean, with this interest, I can roll it on and keep the ball going, right? I mean, I would,
Right.
or I can give you the $5,000 and keep your $40,000 in play, and let's keep this going. And so another two
No.
years, you could give them $5,000. What do you think of that?
Yes, that's great. So, I mean, it would either be that I call them and say, hey, can we just keep this rolling? Or if I refinance it, I would pull more money out, right?
Well, yeah, I
I'm
guess
going to
that would
go
be,
over 50% loan to value. And then they're going to give me their 45 again. They don't have something else that they want to invest in. I'm just going to find if I,
yeah, and they have an asset that's collateralized as an investment, and so you're working for them in their mind. Okay, sorry,
yeah,
my friend. Continue on the.
don't know. It's fun stuff.
I love it.
So that one we use the no payment, and you could easily do that deal with interest only payment too.
Yeah,
It'll work out the same way.
that's how I do it anyway.
So
Yeah.
the only catch with the no payment is you don't want your loan to value very high. You want it a low loan to value so that as the principal of that loan increases, you're not getting above what you can refinance it out for. So, okay. So why do private money investors lend to us? A lot of people have this kind of hang up or fear. They don't want to go out and talk to people about investing because they feel like they're going to be asking for money. So if you remember the whole discussion of how I raised money for ministry, it's the exact same process with private investors. You never want to go out and ask for money because it sounds like you're begging, and nobody likes that. So you're presenting opportunity. So there are people all over who have money that's sitting not in the stock market, or that's in a 401k that they don't use, or some account, and they're not sure how to invest it, or they want to get into real estate but they're not sure how to get into real estate. So when you go out and talk to potential investors, you're going to give them an opportunity, present the opportunity for them to get that great investment. So always remember, the reason they're going to invest with you is because it benefits them. Every pitch has to be focused on the benefits to them and the opportunity you're giving them, not what you're asking for or what you need. So, key benefits you can cover with potential investors. There's a higher interest rate or a higher rate of return than they can get from a lot of other investments. And then with this type of investment, their principal is secured by real estate. So that's a huge difference from the stock market where their principal is always at risk. And the closer they get to retirement, the more that scares them because they don't want their principal at risk. So with these type of investments, the principal is secured by that property. They can get monthly income, which a lot of people really want, and it's hard to get from other investments. And they can diversify their investments. So, every investor hears about diversifying their holdings, and generally they think of only what their brokerage offers them. And this is a great way to, further diversify and give them more things to invest in. And it's an easy way to invest in real estate. So people watch HGTV and they think real estate's so sexy and great and they want to get in, but they don't know how. You're giving them that opportunity to get in with real estate. And they love telling their friends they're investing in real estate. I guarantee you that. So the docs that you're going to use, this is one of those detail things, but you want to know it beforehand before you talk to them. The two main ones you would use is a mortgage note, which just lays out how much money they've loaned to you and how you're going to repay that. So that's where you would make the payment either amortized interest only or no payment. And then you'll have a mortgage deed that says how much money was loaned and what piece of real estate is securing that loan. And it clearly defines what your responsibilities are as the owner of the real estate. And then you would record that with the county so that it's a lien on the property. Those are the standard documents. If you do a loan where it's not tied to a specific property, then you can use a promissory note. And a promissory note basically says, it's an unsecured loan, but basically it means that you personally are the security for that note. So if you default, then they can collect that money from anything you own. And one example of where I used a promissory note, I had an investor who loaned me money for a flip. And I knew when I would sell that flip that I was just going to roll that money into another deal, maybe a flip, maybe a borrowe refinance. And I didn't really want to go through the process of every time I sold the property, paid him off, then I would have to redo the paperwork with him on the new property. So we just did a promissory note for 4 years, and it gives me the freedom to, whenever I sell that property, I just roll it into a new property. And that loan is based on me, not the property, so I can transfer it between properties. So that's a good way to use a promissory note. Additionally, it's always good to have a business summary, like a disclosure that says what your business is doing, what the numbers are, what you plan to do with the loan, and a credibility kit. So you can have a 1 or 2 page document that just real clearly lays out your experience, your credibility, the deals you've done, or details of the deals you're going to do. So those are great documents to have and share with the investor depending on how you're structuring that deal. So I really hope you go further and get into private money. I know for me, it was the tool that kind of unlocked my business and allowed me to reach financial freedom very quickly. I know it can help you reach your real estate goals as well. So I'm glad you were here. Glad we got to share the information with you.
Okay, party people. So what'd you think of Chad? I thought, he's got it going on. Chad, I appreciate you. Can you hear me still?
Yeah, glad to be here, man.
I thought it was good. I have not used, I think sometimes I'm insecure borrowing people's money even to this day, and I'm very confident in what I'm doing. But I never really, I've heard of offering, no payments. 12 months, I've seen that before, and it just makes it cleaner and easier. There's actually investors in this Oklahoma City that loan money that don't want it paid back for 12 months. And, I'm like, why would they do that? I like to get money back as fast as possible because I'm thinking like a private lender. I'm thinking like an investor. I'm constantly turning my money, right? That's how I make money. But there's some people out there that just want a secure investment that's collateralized and then never have to think about it again. And so I really, even myself, I've learned something on there, and I hope everyone else learns as much as possible too. And so I'm telling you, this Chad and I have been working together for almost a year now, or a little bit over a year. And the main thing that you need to do is take action.